Good evening, everybody. Thank you for joining me for another live section to go over some chart and see what's up with the market. I hope all of you have been doing well in the market this last few days. Let's see, give me a second. All right, let's and just a reminder to everybody, this session is every Tuesday and Thursday evening at 10 p.m. Eastern. So feel free to come join me. Bring what you can, or just come see what I have to say about the market. Now, don't just take my word for it, and also do your GD. This is just to help you guys see how I usually look at the market. Most of the time, I'm not always correct, so take whatever I say with a grain of salt. Hey, Kachu, nice of you to join me today. Tesla needs to die. I would like it lower. That gives me an opportunity to get even more. I've been waiting. That drop last week was pretty good. But as we always start, let's look at the heat map of what happened today. So we see today was actually a pretty bearish day. Red, right? Financial suffering the most. Look how bright red that is. And second one is industrial. Energy actually came back last Friday, and Thursday was actually pretty red, right? Materials, red, and then consumer discretionary. Consumer discretionary, IT, pretty red too. But today, energy was leading. So, all right, let's hop right into the charts. So, at the moment, what I'm seeing is we definitely broke out of this wedge here, right? And so that was the wedge that we were looking at for the last 3 weeks. But you can see here, we came back up, right? That huge drop last week here, right? That huge drop. We bounced back from that, stayed, bounced back on Thursday. Friday, we stayed, we continue up. Monday, sort of level out. And today we're beginning to drop again. So you can see this pattern, right? Lower highs that are being formed. So this could continue this way. So this is the daily chart. So we could continue down lower, right? This could be right here is resistance, right? Lower. Let me get rid of these drawings because I had these lines here for a while. Let me pick a new drawing set. Okay. So just blank looking at it, right? So these are the resistance area. So I think it could be a good place a short, right? If we take down this low here, you can see we're forming lower lows too, right? So from here, so we are in this sort of channel going down. If we were to connect all the lows and all the high points from the few from the beginning of the year, pretty much, right? So we could continue down here, and this could be a very good area to short at, right? So if you stop, setting a stop pretty much at 440, right? If you're shorting, short from 440, use 440 as your stop and short down. So right now it's sitting about 430. Let's hit $10 risk, right? So you get in around 10. This is entry, and this is the stop, right? So about $10 risk. But we're playing for the downside, right? So you're shorting it down, and hopefully that it breaks down below this level. So 410, right? So with this is a $10 risk. I'll play that as a $10 risk. Let me erase that. All right, $10 risk. And we're playing for the retest of 410. So from 430 to about 410, so that's $20. So that's a 2-to-1 ratio. You're risking $10 and you're trying to win 20. Right? So from this breakdown, that's what we're playing for. Risk $10 with a chance to win 20, right? And if it goes even lower, right? So if it goes to 440, 410, 410, and it takes it down, you have an opportunity to win more. So that just means that you update your stop to this one right here. And you can still hold a position at 410 if it gets to 410. That way you can hold it, because if it breaks through, because especially since it is in this channel, right? This channel and this leg down, we could see somewhere in the 350 range, right? Somewhere here, or if it just comes back in here, right? So you want to set stop here. So that you're at we're close to the top of the channel. So that's SPY on the daily. With the daily, you want to be patient with it, because so drawing it again, we're seeing the potential play out, right? So we're seeing something about next week, right? Next week, or if it's a little longer, more drawn out, like this low that was set, right? It's about a month in between. So it wouldn't be a run like that. It would be a run like this, right? So we see something like the beginning of April before it breaks even lower. It breaks this low, right? So that's SPY on the daily. On the hourly, right? Intraday. If you're just intraday, it's still a very good area, right? Bear flag, you see here, right? Pop. It's a bear flag. So this is the top of the bear flag, right? And it's starting this leg down. So you're using basically this level as your stop, or since we have already moved from here, you can use this level as your stop if you're trading the hourly, right? So this right here coincides with 433, or you're giving it a little bit of room. If you don't give it any breathing room, we could go even lower to 430, right? So bearish moves. Bearish moves. I don't see anything breaking the bearish flow yet, especially price pattern. You can see it's trending down on the daily. Right, you see that start. It's already, this was the start, but you can see it's really enforcing itself. All right, let's take a look at Apple. Now Apple is a little bit longer drawn out, right? So you can see the difference between Apple and SPY, right? Apple is just it's still forming that channel, but that channel is it's not as sharp down, right? So if we go back to, right, changing this to SPY. So you have it on there, right? You can see it. This one with SPY, with Apple, it's a little bit less steep, but with Apple, it's a little bit less steep, but with SPY, it's basically doing this kind of way. Right? The highs and then the lows, right? So Apple is going to be a little bit lower, but it's just trending with SPY, right? Trending down to the downside. Okay. So same thing with Apple. Could be a good area to put your short position on again, especially if you're a swing trader, right? So you take that, right, from the highs. Right? This could be a high right here. swing point. So you're close to here. It says this is a wick right here. You could add it. You could either put your stop in here or have it here. Give yourself a little breathing room. So around 170, and you're playing for this downside, right, to get to here. So that puts it roughly around 145, 140 range. So you're seeing that. That's one possible play out. Right, just on the daily and what it's been doing. Okay, so we dive down to the hourly. Same thing. Bearish setup. I talk about this before. The bearish setup is always when the 50 moving average, this purple line, is below the 200. So you're always just looking for shorts. And you can see here, establish some. You could do it this as your stop, or if you want to be a little bit safer, you could set up here. Up here, you might be getting a smaller position, but you give it more room to breathe. Pretty much your position to breathe. But in here, you could take a little bit larger position, but your chance of getting stopped out is a lot higher. So you have to weigh the difference between. All right. So if this continues to break down below here, this could be good, right? Right down below here, good for the next few days of trading. Right? Next few days of trading, so we go back to these levels. All right, so that takes us Wednesday, Thursday, Friday. Okay. So it's telling you it's a good place to set up a position. All right. Let's take a look at AMD. AMD definitely did fall today. You see, all of these stocks have one thing in common, right? Actually, I already have a link one. All of these stocks have one thing in common. They're all doing this, right? You see that? You can draw from basically their high points, and there's a straight line down. Right? This gives you the channel to look at on your daily. And this is just looking at price action. We're not looking at the fundamentals or anything of that stock, just the price action of it. And because the price action, tells you what other market participants are doing. Okay. See here, it's already started. It's already at the top of the range. It's already started. So maybe to the downside here, or you give it even more time. Okay. It's gonna go down here. So that's the play, right? We'll stop right here. Roughly around 126, right? Stop. But that's already too high. You see how it already dropped today? Today is already in roughly midway in between this channel already. So we probably missed this already. But if this channel holds, you can go and get in some longs at the bottom for another test at the top here. But we're seeing this channel. That's the important thing. The important thing is seeing that channel and seeing the possible plays that could happen, so that when we do see it, when we do see the next move play out, we could be ready, right? Be ready at the bottom and watch for the tops again, right? So it's already at the middle of this channel right here. You don't really want to put a position on when it's in the middle, right? So this is the middle. Because you want to get as close to this top for a short, right? As close to, and then for long, you want to get it close to this for long. If this holds, right? If it holds, that's what you want. Okay, we dive down to the hourly. Now keep in mind the hourly is gonna be giving you, and the reason why we look at the hourly is it gives you a way to play, especially if you're right in the middle of a channel like this, right on the daily. It gives you a way to still play, but you're just keep in mind you're not playing for a few dollars or anything over $5 or more, right? You're playing for maybe a day at most. A day, if you're lucky, maybe 2 days. That's it. Right. So the hourly, you can see, that's the zoom out to 90 days. So I was waiting for that continuation, that break here, but we see that bounce, right? This bounce support was here on the hourly. When you zoom out, but we haven't retested these levels right here, this resistance here. So this on the hourly here, I would still say I would still consider this as a good short, right? Place the short, and then you set right here. You could probably set it as a place to enter if it goes and retests. So if it goes right here and can't break through, right? This is major resistance, but this is the next minor resistance. Because if this breaks, if this resistance breaks, we could go and test this again. Could be a very good short area. If this doesn't break, then you short it from here. Short it down to the support level. Right. So from 125, right, you start your short position as close to 125 as possible. And you short it down to 100. Right. So $25. But you'll take it whatever the day can give you, right? Because you're using the hourly. Give it like you play for this day only. So if it comes back up here and it drops to here, you just play for that. That's the hourly. Okay. So AMD, right? It's lining up. So if we look at AMD, usually AMD and Nvidia, they like to do sort of the same moves. You can see, look at that. The chart is very similar. Well, basically all tech stock chart is very similar at the moment. And the only stocks that I do really play is tech. So let's see, right? If we draw a line here, boom, that's the upper channel, right? The lower channel, the lower bounds of the channel, right? So we're not quite at the middle yet. This could still be a good entry, but you're gonna get your best risk to reward if you get it close to this resistance, right? So this resistance is right at the moment, right around the 440. Let's see, right here. So around 448, 445 range. So 445 to 448. That's your best risk to reward, because you can set a stop just right above here, right at 450, 455, and then you catch the drop. Right, you catch the drop. So your stop will tell you when to get out, and you basically just how you know or how much you're going to be aiming for is if you're between your entry, right? If you want to get in this range and you know your stop is around 250 to 255, right? So around here, that's $5. Is it going to be a $5 risk, or so the difference between these two, right? The upper actually so 5 to 10ish. But if you were to get in here, this price, it will be 2. and then 7, right? And then so you want to get a multiples of this, right? So for you to make 1x, you have to make about $5 back. So $5 from here, it just sets you down to 230. That's 230 is 1x, right? And then 225 is your 2x for when you're shorting. So you can see that down here, 225 is not that far, right? 225 is just like right here, the middle of the range. And if you play for the bottom of the range, you swing for the bottom, you're at 200, or even lower, you could get to 180. You're very lucky. You gotta be patient with it. So that's how you calculate. That's how you try to know when to get out or what areas to aim for. It's a multiples of your how much your risk for that position, right? And that depends on your entry versus your stop, right? So because these here are stops, and this right here is your entry price, right? That you're looking for, right? So that's if you're playing off the daily. Now, if we dive down to the hourly, you can basically redo the same thing, right? You redo the risk to reward because you could check it out to see where you basically zoom it in to see if you can get a better risk to reward. Right, so you see it trending down, right? The bear signal is the 50 below the 200, and price being below both. So here you see there's some sort of resistance, some sort of wall here. So if we were to play this wall, I would say just swing off this high right here, this high wick, right? So this high wick. So around 238, right? 238 is your stop, and you're trying to get as close to 238 as possible, right? So 238 is your stop, and depending on if you get in, we'll just say that if you were able to get it into 235, this is your entry, and 238 is your stop. So you can see this is a $3 risk per that position. So to make that back, right, when you get a crazy swing tomorrow, and it goes to maybe around 220. So from 235 to 220, you got a $15 drop tomorrow, which is very possible. So that's basically if you can get out at 220, that's right. This is out area, right? That's 5x right there, meaning it's 5 times your risk. So you're risking $3 and you're winning $15. It's very possible. You see the move here, but there are also some dead days. Some dead days where the range, right? Range bound days, where the range is. This is right here. Went from 240, 246, 247 down to about 238, 237. So about $10 a day. So this is very possible, this outcome here. That's just one way to look at it, right? But you can also play the long side. The long side might be a little bit more risky right now, especially since the technicals, right? The moving averages here are showing that price is more likely to go down to the downside because the trend has been going towards the downside. Even though we get these pop-ups here, I would probably ignore all these longs here, and these would just be my opportunity to reload on the shorts. So I don't really like to play both sides. I like to play, especially if the technicals are showing you that it's better to be on the bear side. Just play the bear side. But that's just me. you could do your DD and get it based on your analysis. Right? So looking at the bigger picture, and you gotta zoom because we were just looking at this little grouping. Look at the bigger picture. We see this, right? So this could be the leg down. Could be the leg down again. Right? You see it sort of resistance right here, just basically goes up to here. This could be the leg down. Bigger picture. Okay. And crazy stock today. You know, I've been following SoFi. I do have a position in SoFi. This is a cheaper stock. These are the gambling stocks, right? Stocks that you throw in money and you basically forget that they exist. You know, good news every now and then, but it's still downtrend, right? Downtrend. It's not. So this zone that I drew here, you know, it didn't keep it. Still downtrend. But it could be a very, especially if you're playing for the lows, it could be a good time to load in. But for the moment, it's still keeping. Like this shape right here is trending down. But today it had its earnings and then it made it pop. So actually you see here, it went to $13 after market. I don't know if that will be enough strength to cause it to break above here. Because if it does, I want to see it retest the $15, $16 mark. But for the moment, it could be a good short, right? But this is a very low stock. So if you're shorting it, you're not getting too much, right? You're going from 13, basically 13 to around $8, right? So there's better things to short out there. But this stock is just a gambling stock. SoFi. Now with the news about Russia, we want to take a look at these crazy self-defense stock, right? Like you can see last week, I mentioned it last week and the week before that, right? That this area was consolidating. Was probably a good play. Now, I didn't play it myself, but we did take a look at it, and you see this. We started this little line, and boom, out of nowhere, right? The stock did something different from the rest of the stock market. Basically, since the beginning of the year, so 2022 here, the beginning of 2022, the market SPY was going down, right? Basically, SPY was doing this, and this stock went the opposite direction. It went up. So this could be the stock to play if you're looking to long the market or long any market, right? SoFi. No, not SoFi, Lockheed. Self-defense, right? It's too high right now. For sure, it's way too high. You can see this pop up, but maybe it will establish itself, right? It'll establish it'll find some resistance, and then you want to find some support. So it sort of was going like this, but then you see here, it just keeps going. So you want to find some support. Right? It'll probably level out, and then the 50 will probably come meet it, or it'll die off. If it dies off, you can get it closer to the 50. But if it levels out, the 50 will slowly trend to meet it, and your best risk to reward is closer to the 50, especially when it's trending up like this, and then you get huge pops. Right? But also beware these huge pops. You know, people will take profit. So at the moment, don't get FOMO. don't FOMO into Pakid. You missed the boat in this area already. The boat, loading the boat was here, right? LB, loading the boat was here. This is missing the rocket. You already missed the rocket. The rocket's already gone, right? So don't hop in. Don't say, oh, maybe it could go another few dollars up, right? It could, but your risk to reward is very, very low. You don't know where there's any ceiling in, because if we look at all-time highs, we're looking at the even longer, right? Monthly, we've already taken out the highs already, and that high was established in 2020. So where can it go now, right? We don't know yet. We want to see where it's going to establish some resistance. And then once it comes back down a little bit, right, it dips, that's your entry point. You don't want to you don't want to try and catch the rocket. You're probably going to get barred, right? That's if you're swinging, right? We dive down to the hourly, still too high, right? You see here, huge gaps up. The 50 is above the 200, right? Purple line, that's the 50. The yellow line is the 200. And so you see how far removed it is from the 50? That's not sustainable, right? Price action like that, where everybody just gets so hippity hoppity, right? That's not sustainable, especially when you're used to the stock doing this, right? This is a sustainable move. This was the loading area. You see how it's flat, the loading area here, and then boom. This is the reward for loading in this area, right? This area. This is the result, the loading, the result of it, of being patient in this area and slowly getting in. Okay. So at the moment it's too high. Probably wait for like another drop like this to happen, right? Another drop like this is a good loading area. And if anything, you want to see it come back to the 50s, right? Because it trends really well. Good trading stocks will respect the 50 moving average, right? So every time it comes back to the 50, that's your loading point. If you miss this, if you miss the run, wait for the 50 again when it comes back. I know there's lower moving averages that you could use, but the 50 usually never fails you. Has never failed me. So play with the 50. You see how well it respects the 50 here. Sometimes it bleeds through here a little bit, but most often, right, the 50 is pretty good. Lets you get in here, right, along the way. So when it's close, so right here would have been good. This wick down, huge wick down. So wait to see if it's gonna go, because it seems to, especially on the hourly, it seems to have already hit some sort of wall right here for the moment. So if it could come back down, retrace down to maybe 430, could be a good area to get in. You won't pop to all-time highs again. That's where you will profit. So 430 to 430 to, so if it comes back down to here, so, right, entry or close to 430 with a stop somewhere below, a little bit below the 50. So a little bit below 430. So maybe go for 425, right, as your stop. And then 430 is your entry. So $5 risk, and catch it to the upside again. So the upside is around 460. So that's a $30 gain for $5 risk, right? So 30. So basically your risk to reward is basically 30 over 5, right? So that's 4x for those who can't do math. I have my calculator to the side. But yeah, so watch for that. Be patient with your trade. Let the trade come to you. Right? That's all based on price action. Okay, so we're basically at the 30-minute mark, and I want to keep these sessions short so that we can focus or we look at the few ones. And usually, I do ask people to bring some ask if they want me to look at any charts in general to leave in the comments, or as I'm doing the live, leave in the comments. Uh, so if you do for the next one, and a reminder is I do this every Tuesday and Thursday evening at 10. If you do have any tickers that you want to look at, so we can look at it as a group to find opportunities, feel free to message it to me or leave it in the comments of my reminder post, or even come on live and just shoot it out, because we'll take a look at it, and if we see opportunity, we can make our plays or plan out our plays ahead of time. Okay, so with that, I'll close it out. I want to thank everybody for joining me tonight, and I hope that you guys are staying safe. Times are getting pretty scary, especially not just in the stock market, but also with the invasion and everything. So stay safe, everybody, and trade profitably. All right, have a good night. Bye bye.